Hi, Andrew Bell here with you, coming today from 8 Rapallo Drive, the Isle of Capri, where we're looking at the second fundamental that drives the real estate market. And that one is constantly in the news these days, and of course I'm talking about interest rates. Now, while we're going through, have a good look at this single-level Hampton-style residence on Main River while we cover the topic of interest rates, because we believe this home is one of the best value homes on the Gold Coast at present. Recently refurbished, the Isle of Capri is, of course, without a doubt one of the standout markets of the Gold Coast, and is in fact an island right in the heart of the city. I'll touch more on the property in a few moments. Now, through its effect on mortgage interest rates, the cash rate is the most significant determinant of housing demand. I repeat, the most significant determinant. There is a great example of that currently, where we saw a recent drop of 0.25% in interest rates, which resulted in the highest auction clearance rates nationally since 2009. The official cash rate is determined by the Reserve Bank of Australia, whose primary purpose is threefold: keep inflation within a 2 to 3% band, stimulate growth in the economy, and create employment. In simple terms, if the cost of borrowing to fund a purchase falls, it stimulates buyer demand and vice versa. That's the effect on real estate. After being on hold for 17 consecutive months, we saw a 0.25% drop last month in interest rates, which took the rates to the lowest level since 1968. The Reserve Bank is keeping a watch on the number of very key economic measures. For example, inflation, where the latest figures show it's around early 2% mark and falling. It certainly opens the way for further interest rate drops. The Australian dollar, which has fallen from the highs of around $1.08 to the high 70-cent mark. This is stimulating the economy and really has the same impact as an interest rate drop. Now, unemployment is another measure they're watching, and this is where most economists are saying that the current economic growth is simply not enough to reduce our unemployment levels, so they're calling for further interest rate drops. The Reserve Bank also watches real estate prices, but recently said that the major price hikes are being restricted largely to Sydney, and so it's not a national issue. So when we take all of those factors into account, the slower Australian economy, higher unemployment, falling commodity prices and lower levels of consumer and business confidence, all of this argues for further interest rate drops. The Reserve Bank's major concern is they don't want to trigger significant price growth in real estate. And so to consider more interest rate falls, they may bring in regulatory controls to borrowing. The fact that they'll limit the capacity for buyers to borrow as much money and slow price growth. They're also aware the Australian dollar falling and all prices falling haven't yet filtered right through to the entire economy. And they really act very much the same as interest rate falls. And so the Reserve Bank is inclined to wait and watch those impacts before making another move. However, it is highly unusual for the Reserve Bank to make just 0.25% adjustment in rates, whether it's up or down. If they see the need to drop or raise interest rates, it's usually by 0.5% and done in 2.25% moves. So it is likely that we will see another interest rate drop, but we must be very, very close to the bottom of the interest rate cycle. It's interesting to note that the Deputy Governor of the Reserve Bank did say recently that interest rate cuts are losing their potential of stimulating the economy. He stated that in the past, lower interest rates would have forced more people to spend money, the money they had in the bank, whilst today, many people have been paying down debt and saving money. Either way, not spending as they would like to see happen, and this is a concern. This certainly suggests that they're not feeling further drops in interest rates are the key to stimulating us as consumers. So the pressure to drop interest rates any further seems to have evaporated. However, we should remember that they are at generational lows, and for borrowers, this is a unique time that should not be missed, and particularly locking in those long-term fixed interest rates. Now back to Rapallo Drive. I hope you've enjoyed viewing the many aspects of this wonderful home on a large 776 square metres of land with 18.3 water frontage. It also enjoys fantastic indoor and outdoor entertaining areas. The kitchen has a stunning outlook over water. The home has to be seen to be truly appreciated. It is in a highly sought after price bracket, being priced at $1,750,000. And this is the bracket that saw significantly more activity over the past 12 months, with over 500 sales in the $1 to $2 million bracket during that period of time. It's hard to imagine you could find a fully renovated home right in the heart of the city, yet on a small and exclusive island with one of the best lifestyles on the coast on offer. Certainly at this sort of price bracket. If you'd like more information, please call our sales representative Michael Willems or Jackson Paradise, whose details are shown on the screen. And they'd only be too happy to provide you with more information. Well, in a fortnight's time, we'll touch on the third fundamental, and the one that's going to have a significant impact on the real estate market over the next couple of years. Until then, all the very best.